That's interesting. You said you're responsible for Florida.
Mhm.
Also, did I see you somewhere where you guys are in the Midwest too, like
Yeah.
Texas
So
or Arizona or something like that?
yeah. So like 2015 to like 2017, 2018, we were, Texas straight up and over and just take out kind of like the Chicago North cold region and the
Yeah.
Northeast. And we were like, we'll buy any deal that makes sense anywhere. And what happened was we had a deal here and a deal there and a deal here. And it was like to visit every property, you'd have to take 12 flights, 15 flights.
Yeah.
Now we rejiggered and we're focusing on North and Central Florida. So really Jacksonville, Daytona, Orlando, and Tampa and Pensacola a little bit. And then we're also focused on the Midwest. So Cincinnati, Columbus, Louisville, Indianapolis, Nashville. So
Why?
we're trying to build up scale, and it makes just things a lot easier. Not even the flights, just management. So we had like 4 or 5 different management companies. Now we're really down to 2. We still have 2 other ones in play, but they only manage 3 outstanding assets of 17 currently.
Okay.
So they're a small portion, but we really only use 2 now, so that makes it significantly easier. Greater economies of scale in the markets and the areas. So that's where we focus now.
Why those markets though? Out of all the entire U.S., you guys seem to have your targets just on those.
Yeah.
Why just those markets?
So when we first started, we obviously targeted the east side because there's just as many good markets on the east side of the U.S. as there are on the west side. It's just way cheaper and way shorter for us in New York to get to the east side of the United States. So, why pick a Phoenix when you can pick a Atlanta, right? It's,
right.
Not saying they're the same market, but they're probably in similar standing. So
yeah.
What's, unless you really think Phoenix is the best market, which we didn't think it was head and shoulders above, if there were investors that were like, I only want to invest in Phoenix, great, go invest with them, not with us. So
yeah.
That was why we took that out. We also still really like the Carolinas. We've just, our first 3 deals we bought there were in Greenville and Charleston, and then we bought a 4th one in Wilmington. We've just struggled since those first 3. The 4th one we bought last year, but that was kind of what's the word? Isolated incident.
Okay.
We just haven't been able to find anything so that we felt comfortable buying. So we love the area. We would continue to buy Raleigh, Charlotte, Greenville, Charleston, Wilmington, those areas. We just can't find anything worth taking down. And we just felt like we were wasting time. So we found that first deal in Jacksonville, Florida. Then we found a second deal. And then late last year, we actually had 4 properties under contract for like 750 units, but we ended up dropping out of 1 after DD. And we bought another 550. And then we just put 2 more under contract. So we were finding some really good synergies there. And then Columbus was another area we really loved for years and years. It's actually John's first deal he ever bought was in Columbus. It was a 48 unit. And the problem that we've always had with Columbus is the tax reassessment there is super aggressive. The school districts went crazy, and basically you'll get some sort of percentage on sale. If it's a sale tax reassessment, if that's how they do it, usually you'll get, 50% or 70% or 80% of sale. Columbus, they do 100%. So your spikes are huge, but we never found that cap rates reacted accordingly. They were still very low, and your tax adjusted cap rates, we just couldn't make heads or tails of. So we just stopped looking for stabilized stuff there. But where we've strayed to now is we've actually found now another 3 assets with super low cost bases in the mid 30s to low 40s, where the tax hit has not been nearly as significant. And because the appetite on sale for, still low cap rates, today, in the 5-ish range, mid 5, we feel we're insulated enough that we don't have to worry as much on sale as if we were buying it, where because taxes would go crazy, we would want to see much higher. There's still investor appetite for that higher stuff. So we found some pretty good success in the lower cost basis range. So that's the only reason we've revisited there. But that's kind of why we've strayed towards those areas. The other big thing too, why we picked those areas is, management is going to make or break your deals. So we use third-party management on all our properties. We don't self-manage anything currently.
Yeah.
And
you guys use the same property manager in all of them?
so that's where I said right now, primarily it's two,
Just
one
two.
in Jacksonville and one in the Midwest.
Okay.
Really just Columbus for now, but we're trying to get into the other areas. And as we started working with them, we just really, really like them. They're regional players or local players. You know, they've got decent scale, but they're not these huge companies. So we deal directly with, you know, the owners and, you know, the higher ups of the company. We're not dealing with the, you know, the 10th person down on the ring, and they're not really the decision maker.
Right.
You're right to the owner. Yet we had really good relationships. They see properties the same way as us. They're also both investors themselves. So they get it from our side as well as the management side. And we said, we just want to continue to work with these people because they make our properties good. So why wouldn't we continue to invest with them? So that also kind of helped shape where we were investing as well.